So I'll start whenever you'll say. Yeah, I can start. Hi, good evening once again, and welcome back to this discussion on audit. So today we'll continue with our discussion in relation to the previous chapter that we started. Let's do a quick recap in terms of whatever we have discussed. So we discussed about the meaning of audit. Primarily, our focus in the previous discussion was all about understanding of audit, means what audit is all about. Yeah. So can you just quickly share your insights as to what do you understand about audit? Everyone, quickly, yeah. I'm sure you would have gone through whatever we have discussed in our previous session. So quickly, whatever we have discussed so far as around audit, what do you mean by audit? What are the advantages of audit? What are the things you will look at? What are the objectives of audit? Okay, so there are a lot of things. Huh? Quickly, if you can just share your insights as to what do you understand about audit quickly, then we'll also begin our discussion today in respect of this chapter further. Yeah. Manish, I understand there was some disconnect. So is it all okay now? All right. So just a minute. All right. So going back to the discussion about audit. So we discussed about audit in our previous discussion, that audit is all about checking, examination. And in the context of audit, it's all about checking of the financial information. Okay. And this financial information is in relation to the financial statements of an entity, which could comprise of balance sheet, P&L, and this complete set. Okay. We also understood as to why this is required, what all things are required to be done, what are the objectives one can achieve out of this audit. We also discussed briefly as to, where do you face the challenges. We also discussed about the appointment. Who will appoint the auditor? What is it that the auditor needs to provide? So we understood that when it comes to the audit, so there are few factors auditor needs to look at. One is, of course, the materiality. Okay, so in terms of materiality, auditor needs to take care that only the significant items are required to be audited. And then in terms of errors, we discussed that mistakes could be one which are intentional or which are unintentional. And the outcome of audit, if you remember, what was the outcome of audit? That will be in the form of an audit report. So we also looked at one audit report as to how this audit report really looks like. Okay, now there are few terms which are used in the context of an audit. Okay, generally. So we'll just try to spend some time in relation to those terms, and then we'll also look at some questions in terms of whatever we have discussed. We'll just try to go through some of those questions. Engagement. Now, what do you mean by an engagement? Engagement means there is an arrangement or there is a project which is required to be executed. Okay, so that is what we call an engagement as. Now, in the context of audit, what is it that you find in terms of the arrangement. So in terms of audit, okay, so when it comes to the audit, so there will be an engagement. Yeah, so there will be two parties. So let's suppose there are two parties. One is ABC Limited. So that will be one party, means the company which is required to be audited. And let's suppose there is another audit. Okay, let's suppose this other auditor is, say, Manish and Company. Okay, so this is the auditor. Yeah, and over here we have this company or any entity which is required to be audited. Now there is an arrangement between these two parties. So what is the arrangement? That this firm will audit this company ABC Limited. Now, for getting into this arrangement, an agreement needs to be executed, means an agreement needs to be signed. Now, what do you call that agreement as? This agreement in the context of audit is generally termed as engagement letter. Yeah. So in very simple terms, you can say it's an agreement. Agreement which talks about the terms and conditions which will exist between the two parties as to what is it that Manish and Company is required to do. What will be the responsibility of the company? What will be the responsibility of the auditor? Each and everything. Okay. So this agreement or this formal agreement is what you call as engagement letter. Means for this particular engagement, a letter has been signed. And what is that letter? That letter is nothing but an agreement. And that's why this project wherein the auditor is required to audit the financial statements is very commonly termed as engagement. Understood the meaning of engagement? Engagement means the project, the work. Okay, and which work is it that we are discussing over here? So we are talking about audit work. Understood? Yeah. So in the context of audit, this engagement is nothing but the, you can say, sort of synonym as far as the audit is concerned. So what is an engagement letter? This again is no different from what you call a document as an agreement. Okay, so this is nothing but an agreement for the purposes of our understanding. All right. Yeah. Now, excuse me, moving further. When it comes to the audit, audit means statutory audit that we have been discussing. So we discussed that whenever financial statements of a company are to be audited, that is what we call as, yeah. Now this audit is performed by a third party, or you can say this project is performed by a third party. Yes or no? So now if you look at this company for ABC, who is doing the audit? Auditor. Yeah. Who is doing the audit? Auditor. And this auditor is a third party, means this is not a part of the company. This is external to the company. This is external to the company, means he is not a part of the management of the company. So that's why this auditor or this audit in relation to financial statements is also called as external audit. External audit means which is done by an external party, which is done by a third party. Yeah. As we discussed that in India, every company is required to get this audit done. Every company. But for non-corporates, this may or may not be done. In fact, in the previous session, there were questions around this external audit. What do you mean by external audit? Okay, so now as far as this external audit is concerned, you can just simply say that the statutory audit, okay, which involves audit of financial statements, is nothing but an external audit. Why? Because it is executed by a third party, which is executed by an external party. Understood? Yeah. Everyone clear on this? Yeah. Great. So now moving, as far as the audit is concerned, I think we have talked about it. What are the benefits of audit? But let's quickly go through some of these benefits. Now, if the audit will be done, okay, if the financial statements of a company will be audited, so what will happen? Reliability will increase. Yes or no? Quickly, please share your thoughts. So reliability of that information will increase, correct? If the reliability of that information will increase, if the reliability of that information will increase, so what is going to happen? The quality of that information can be considered to be better. The stakeholders are to get benefit. Yeah. So what are the benefits? One, the information becomes more reliable. You can say that is something which you will consider to be of better quality. It will give the confidence to the users of the financial statements. Okay. So there are stakeholders, various stakeholders. For example, shareholders, employees, investors. There are a lot of parties who are interested in that entity. Yeah. So they can find a mechanism through which the information which they get will be considered to be more reliable and is of better quality. Correct? Now, when it comes to a company, if let's suppose in a company, checking is quite common. Okay, so let's suppose there's a company in which checking is regular. Yeah, employees understand that any information can be checked. So will that work as a check on the part of the employees or not? Over to you quickly. What do you think? What do you think? If let's suppose in a company you find that checking is quite regular, so will that work as a check on the employees of the company or not? So will they be concerned, or you can say that they will be conscious of this fact or not, that any information which they provide, anything that they have been doing can become subject to check? Yes or no? Nikita is saying, what about others? Are saying yes. Muskan is saying yes. Very good. Ritika is also saying yes. Great. Anuj is also saying yes. Great. Now, as far as this audit is concerned, this not only helps the external parties, stakeholders, but also the company. Why? Because in this company, the employees who have been working, they are conscious of this fact. So the chances of those employees making mistakes, or you can say making intentional mistakes. What do you mean by intentional mistake? This will go down. This will go down. This will reduce. Yes or no? Yeah. So I can see the same response from Ashri, Vishnu, Neetu. Great. Srinivasan, I'll come to your query. Yeah. I'll come to your query. Okay. Now, this will also help the government authorities. So all of these are the stakeholders. Bankers, we discussed, lenders, they rely on this information of the company. So they are also going to get benefited. Plus, the company will also be benefited. Company will also be benefited. Vijay Lakshmi is saying that what do you mean by this check on the part of the employee? Okay, let's try to understand. So say for example, an employee is required to compute depreciation. Okay, an employee is required to compute depreciation. Now, if the employee will understand that this information which he is providing is subject to checks, means anybody is going to check. So will he be careful in doing that or not? Yes or no? Tell me. Or if let's suppose there's an accountant who is required to process payments. So it may happen that he may make fraudulent payments. But if he'll know that there is someone who can check his payments, so will he be conscious? Yes or no? Yeah. That is what we call as a check on the part of the employee. Yeah. So he'll be more careful. So this is what Nitish is saying. Very good. Yeah. Clear on this? All right. So now I think we can pick up this question. Everyone. Yeah. All right. So let's pick up this question. So today we are also going to discuss the questions which are in relation to the topics that we have covered in the previous session. Okay. Yeah. So remember, I asked you that you need to just make sure that you revise everything. So this is going to be tested now. I'm just hoping everyone is ready with this. Yeah. Everyone here ready on this? Yes. All right. So let's begin with this. Ziba Products is a partnership firm engaged in trading of designer dresses. The firm has appointed JJ and Company chartered accountants to audit their accounts. The auditors were satisfied with the control systems of the entity. They carried out their required procedures. Okay, auditors carried out required procedures and necessary verification. Means auditor carried out their procedures. In particular, auditor carried out sample checking. Okay, so they performed sample checking of purchases, traced purchases to the GST portal. Okay, so it's one of the procedures you can say. So they ensure that whatever purchases are recorded are those also appearing on the GST portal, means with the GST records of the company, they matched it. Okay, and they also obtained confirmations from the suppliers. Yeah, so in respect of the purchases, the suppliers were asked for confirmations. Yeah, so this is what the auditors did. The auditors were satisfied with the audit evidence obtained by them as part of audit exercise. An audit report was submitted to the entity, given opinion that the financial statements reflect true and fair view. Okay, so as far as the financial statements are concerned. However, later on, now this is important. However, later on, it was discovered that the purchase manager responsible for procuring dresses from one location was also booking fake purchases of small values by colluding with unethical dealers. Okay, so there was a fraud which was going on in the entity. Payments to those dealers were also made in connivance with the accountant through a banking channel. Okay, so now we have looked at a situation wherein the audit of the entity was performed. Auditors were okay that as far as financial statements are concerned, auditors have given true and fair view. True and fair view means clean report has been given. Clean report has been given. Okay, but subsequent to this audit, a fraud is discovered in the entity. Okay, fraud is discovered in the entity. Partners of the firm are now blaming the auditors. So they are asking the auditors that what checking have you done? Okay, so they are calling this exercise of audit as futile. Now the question is, are the partners correct as far as their point of view is concerned? Yes, over to you. I'm just hoping that you have understood this situation quickly, everyone. What are your thoughts? Sainath is saying no. Nitya is saying no. Anuj is saying, sir, partners are not correct. I'm getting a lot of responses, so I have not been able to just go through this complete response. Pranav is saying no, partners are not correct as only the audit has got some limitations. Okay, Parvez is saying no, they cannot blame the chartered accountant because it goes beyond the scope. Okay, Hardik, I think has got the same response. Ritika is saying no, sir. It should be no. Muskan is saying partners are not correct. All right, so I can see that everyone is saying the same thing. Okay, then Ashdeep is saying auditor is not to be blamed here. Mohammed is saying no, sir, because all the transactions are cleared that time. Okay, Shatish is saying it is beyond the scope of audit. Again, no. Then I think Myana is saying no. Vaishnavi is saying partners are not correct because auditors have followed the auditing standards. Tisha is saying they are not to blame the chartered accountant. Okay, Sajid is saying no. Then Akshara is saying mistakes are on the part of the partners. Okay, Great. So I think Pawan is saying it's not caught as the audit is performed on a sampling basis. Lakshita is saying, sir, partners are not correct as the audit has completed. All right, great. Pranav is saying there are inherent limitations of audit and fraud cannot be deducted if it is conducted without the knowledge of the auditor. All right, so I can understand your thought process and good to see that everyone is giving the same answer, which is no. Very good. So Vishnu, I think has got the same answer. Vishnu, Neetu, Goda, Adishri, Vishnu. Great. So Avinash, I think, has got the same answer. Srinivasan has got the same answer. Great. So let's look at the solution. Now, in this case, if you look at the entity, so I'm not talking about the auditor right now. If you look at the entity, the internal controls of the entity clearly failed. Yes or no? So every entity must have got controls. Why? Because for various processes which will be running in the organization, entity will have some controls around that. Entity will have controls around that. So clearly there is a failure as far as those controls are concerned. Okay. Now in this case, those controls have also failed because this was done intentionally. See, fraud is something which is very, very difficult for anyone to detect. Okay. Yeah. So whenever it's something intentional, yeah. So the person who is committing the fraud will take care that nobody else is able to capture that. Okay. So that's why it becomes very, very difficult for anyone to catch that. Now, in the given situation, if you look at the auditor, yeah, if you look at the auditor has relied on the control systems of the entity. So on the basis of the limited procedures which the auditor had performed, what did they find? That control systems of the entity were okay. They were satisfied. But one must understand that audit is not about checking each and everything. Yes or no? Particularly, if you look at this particular fraud, purchases of small values were fake. Okay. So generally, what is it that auditor will not get into each and every small value item? Of course, as a part of his samples, he will pick up some small items, but each and every small he'll not pick up. Maybe some of these small items which were fraudulent was not picked up by the auditor. So that's a limitation. Yeah. So if there is a limitation, so what is going to happen? That will have an impact on the audit execution. Yes or no? That will have an impact on the audit execution. Yeah. But will that be known to the auditor? The answer is no. Why? Because if the auditor has done his work in a diligent manner, if the auditor has performed his work in an appropriate manner, then the auditor should not be blamed for the same. Then the auditor should not be blamed for the same. Why? Because this is something which is inherent. Okay, so there are some inherent limitations of audit. Yeah, so this is not something which was done intentionally. Clear? Everyone clear on this? Any questions now? Any questions? Any doubts if you have? Manish, is the audio all clear? Manish, audio is all okay? Okay, yeah, because I can see some queries around the audio, so I understand. Okay, all right, yeah. Okay, so now I got this question about the inherent limitation. So we'll come to this part as around the inherent limitations for audit. We'll come to this part. Okay, so Srinivasan is asking, sir, can you please answer my query? So Srinivasan, can you please let me, okay, so Srinivasan has a query now. He's asking, sir, in case of a company, if the audit fees are increasing and huge losses, I think I answered this, huh? I answered this in the previous session also that this has got nothing to do. See, audit has got nothing to do with the losses. Audit fees is all based on the efforts. The more the work, the more will be the audit fees. So it doesn't happen that if there are losses, audit fee will go down. If there are profits, audit fee will increase. Okay. So there's no such linkage. If that linkage is there, then that is inappropriate. Yeah. So one should not really go by that. Understood? All right. So Anirudh is saying, if in a given situation, if the auditor only relies on the internal control matter, in such a case, auditor could be liable, won't they? See, you are absolutely right. But as far as the internal controls are concerned, for the auditor to rely on those internal controls, auditor will always test those internal controls at a certain level. Okay, again, all the controls will not be tested by the auditor. At a certain level, testing of controls will be performed. And we'll discuss this testing of control in greater detail as we move further. On the basis of testing of those internal controls, if the auditor finds that things are satisfied, then of course he can place reliance on internal control. But even after placing reliance on internal controls, auditor will perform some additional procedures. That again, we are going to discuss in greater detail as we move forward. Okay. All right. So Sarvesh has a question around inherent limitations. See, inherent limitations is something that we are going to discuss now. Okay. So please hold your thoughts around inherent limitations. I'll come to that point. Okay. All right. So Pallavi is asking, sir, what is EDP audit? See, EDP is all about technology. So in case of an audit, the technology which is used by the audit, that is what you call as EDP audit. For example, if let's suppose for selecting samples, a tool is used by the auditor. So that is what? That is the use of technology. That is what you can say briefly call as EDP audit. It is mentioned that the audit is done on sample basis. There might be a chance of missing the fault, right, sir? In this case, can the partners blame the auditors? No, because that is something which is a feature of audit. And if you remember, Rachana, we discussed that auditor cannot check everything. Do you agree with me? Yeah. Auditor cannot check everything. It is not possible for the auditor to check everything. So that's why auditor can only do limited checking. And on the basis of limited checking, whatever auditor will find, he will just make sure that that has been taken care of. Muskan is asking, sir, as the partners found a fraud, so what do they do about it? Is it investigation? Will they conduct an investigation? See, that again depends as to what is it that they are going to do about it. That will again depend on the extent of fraud. That will again depend on the nature of fraud. There could be some reporting implications, means there could be some regulatory requirements, okay, to report that. If not, then of course internally they would want to make their systems more control, the systems stronger. And how will that be done? Only and only when they are able to find out the gaps. Because if a fraud is committed, so definitely there is a gap. So where does this gap come from? Okay. Satish is asking, sir, what is the difference between audit and auditing? No difference. That's one and the same thing. Okay. Anirudh is saying, sir, reasonable assurance, not a material misstatement, random sampling, internal matter, not an investigation. These are some of the things that you find in case of audit. Yes, very good. Tanya is asking, sir, in this question, auditor is not responsible for this unfair report. So Tanya, where do you find the report to be unfair? Can you please elaborate? So why do you believe a report is unfair? As far as the audit is concerned, auditor has performed all the procedures, all the required procedures in a diligent manner. So on what basis can we say that his report was unfair? Yeah. So as far as the audit is concerned, the audit process was performed in a diligent manner. But we understand that even though audit is performed in a diligent manner, still some of the errors may remain. Yes or no? Okay, clear on this? All right. So Neetu has a query. Neetu is asking, Sir, is it reliable to check only sample for audit as in the given question? Yes, that is absolutely okay. And that is what you generally do in case of an audit. Okay, and now let me just pick up small sort of situation with you, because I can see a lot of your queries around the sampling, around some of the limitations that you see in case of an audit. Now, say there is a company. Now, in this company, what do you find? Let's suppose we are talking about purchases. Now, let's suppose during the year, in fact, this is the same example we discussed in the previous session also. But again, just to clear your doubt, let's try to understand this once again. Let's suppose in this company, there are so many transactions of purchases. Okay, all of these are the transactions. Yeah. So one can say lakhs of transactions are there. Okay. Now the question is, can the auditor go and check each and every transaction? Tell me, what are your thoughts? Quickly, Tanya, if you can just answer this. Can the auditor go and check each and everything, each and every transaction? We understand there are lakhs of transactions. Tanya is saying no, and everyone else is also saying no. So let's suppose auditor has checked these samples, these one, and let's suppose these one. Now, there's again no basis available for this. I'm just trying to do this in a random manner. Okay, so this random selection has been done by me. Okay, yeah. Now the question is that it is very much possible that this set of transactions involved fraud. Okay, so there was a fraud in which set of transactions? This set of transactions. Now, tell me one thing that you yourself mentioned, that the auditor cannot check each and everything. Yes or no? You mentioned that auditor cannot check each and everything. Yeah. Now, in the given case, knowingly that auditor cannot check each and everything, so some of the transactions which will get left out. Why? Because that is how audit can be performed. There's no other way. This is the only way audit can be performed. So in that case, if let's suppose these transactions carried fraud and which have not been checked by the auditor, so would you like to blame the auditor? Over to you. What do you think? In such a case, would you like to blame the auditor? Or do you think it will be appropriate for us to blame the auditor? Lakshita, Rachna, they're saying no. Tambeshwari is saying no. Anurag is saying no. Great. Bhavya is saying no. Vanita is saying no. Manvi is saying no. Very good. So there you are. Now, in this case, there is a limitation. What is the limitation? Let's try to understand that some of these transactions which have not been tested by the auditor, okay, all of these transactions which have not been tested by the auditor, did the auditor intentionally leave this? Yes. But was there any option for the auditor to go and check that? No. Why? Because if the auditor will check each and everything, he will not be able to complete the audit. So that's why this limitation is what you call as inherent limitation of the audit. Inherent limitation of the audit. Okay, or you can say this is a feature of the audit. That is how audit is required to be performed. So if the auditor has done the audit in this manner, you cannot blame the auditor. Understood? Understood? Yeah, now clear on this. Pavan is asking, sir, it's not a big company, then an auditor can audit whole of the information. He think there must be anything. Yeah, which is right. But please understand that if it's a small company, let's suppose in a small company, instead of lakhs of transactions, there are thousands of transactions. or let's suppose there are hundreds of transactions. If let's suppose you are sent as an auditor of a company, so will you go and check hundreds of transactions? Tell me, Satish, will you go and check hundreds of transactions? Moni, this is the meaning. This is exactly the meaning, inherent limitation. Okay, so in this case, this sampling that we did, that is what you call as inherent limitation. Okay, means there is a restriction in a way. Yeah, so Satish is saying no. So that is what you do in case of an audit. Understood? Pallavi is saying, sir, if auditor know about failure of internal control while doing sampling, and even if he ignores them in the audit report, will he be liable? Of course, yes. See, if the auditor has come across some errors, but the auditor is ignoring them, and if those errors are significant, then of course he is going to be blamed for this, but not otherwise. Okay, not otherwise. Clear? So I can see similar sort of response from other students as well. Vibhor is asking, sir, can we increase the number of auditors so that there can be more efficient checking? So tell me, Vibhor, for a company, how many auditors will you appoint? So will you appoint 100 auditors? Let's think of a company, say, which is medium sized. Okay, pick up any company which is medium sized. Fine. Or say which is a small company, which has got thousands of transactions. So will you appoint 50 auditors? Will you appoint 100 auditors? Tell me. So if you do that, do you think that work is going to be more efficient? What are your thoughts? No, the efficiency will go down. Why? Because so many auditors will come, they will follow different approaches. Everybody will have his thought process. There will be a lot of duplication of work, and please also try to understand the perspective of the company. So much cost they will incur. Huh? That it will not be an audit, that will not be a project. Understood? Yeah. Okay, so Shora is saying, sir, internal auditor can be appointed as well. Yeah, of course. So there are ways to deal with these limitations. We'll discuss about all of those ways as we move forward in terms of our discussion. Srinivasan is asking, sir, artificial invoice in intelligence can check all the invoices. See there again, I think you are not trying to understand the perspective. Okay, so it's not about whether a tool is there which can check everything or whether a system is there which can check the everything. The point is that do we really need to check everything? The answer is no. And it is not possible even then, even that tool to check everything. There again, so if a company is there which has got hundreds of transactions, you must also understand the fact that the nature of transactions will also vary. So if let's suppose you are making the use of tools, you are making the use of AI as an auditor, your effort will keep increasing. So you should not think that AI is all about just click of a button and the things are done. It requires application of mind. It requires judgments. Okay. Yeah. Sunidhi is saying, sir, please explain how checking is done. See, checking means for a transaction, if let's suppose this purchase is required to be checked. Okay. Now in this example, let's suppose purchase is required. So as an auditor, you will check purchase invoices. You will check this, trace this to books of accounts of the company. Means you will trace this to the ledgers of the company. You will also check this to other records, maybe the history records. Okay. And there are a lot of procedures which you will follow. And some of those procedures we are going to discuss. So when we'll talk about all of those audit procedures in respect of various items, we'll talk about that as well. Right? Yeah. Everyone clear on this? All right. So quickly, let's move on to the limitations. So some of those limitations that we have just discussed, let's also flip through those limitations. Let's try to understand as to what do you mean by those limitations? Okay. So some of the things as around the limitations we have just discussed. That as far as the limitations of the audits are concerned, audit procedures have got some limitations. Okay, what are the limitations? Sampling poses one of the limitation. Yes or no? Yeah. Audit is all about checking in a limited manner. We discussed that audit is not an investigation. By audit, you are doing selected sampling, you are doing selected checking. You are not examining everything on 100% basis. There is a restricted scope, and the scope is around what? Scope is all around financial statements, and which is different from what you do in case of investigation. In case of investigation, the scope could be tremendous. This could be significantly higher as compared to what you do in case of an audit. Yeah. So the scope is limited. Scope is limited. Yes or no? Yeah. Then, in case of an audit, can you tell me when is it that the company will prepare the financial statements? Quickly, yeah. So, what do you think when a company is required to prepare the financial statements? Over to you. Can you tell me that when is it that the company is required to prepare its financial statements? Quickly. When is it that a company is required to prepare its financial statements? Very good. Rachana is saying end of financial year. So that means 31st of March. Correct? Yeah. Now, so if you look at the company from 1st April till 31st March, financial statements are required to be prepared. Yes or no? Yeah. And financial statements also need to be filed with the regulators. There's also a timeline. So if the company will prepare the financial statements for this period, they will also have to get this filed. Yeah. So 30th September, you can say, is the cutoff. 30th September is the cutoff by which this is required to be filed with various regulators. Maybe income tax, ROC, there are a lot of regulators. Huh? There are different timelines. So that means effectively, what is the maximum time up to which financial statements need to be finalized? What is that maximum time frame that you look at? So we can say that this is the time frame. In this time frame, company is required to prepare financial statements by 31st of March. Do you think company will be able to prepare the financial statements? No. If 31st March is the cutoff, so company will also need some time to prepare. Yeah. So let's suppose company ends up completing the work, say, by 31st of May. So what is the time which is left for the auditors to audit? 4 months. And there are a lot of administrative things. Board meeting will be conducted. Numbers will be looked at by the directors. Okay, so internally the management will also finalize a lot of documentation around ROC, around income tax. So what is it that the management will do? Management will give the auditor maybe a month or two. Okay, maybe this is the time period which will be provided to the auditor. Yes or no? For the purposes of audit. Yeah, Sai, I'll come to your query. So this is the time frame which will be provided to the auditor. Yeah. So now, in case of an audit, can we say that auditor has got tremendous time period that he can just go on, keep auditing for months and months and months and months? Is that practically possible? Tell me, what are your thoughts? So there is always a time frame which is available. Within that time frame, auditor is required to complete the audit. Yes or no? Yeah. So that again poses as a limitation. That again is a limitation on the part of the auditor, that he has got some timeline. Within that time frame, he is required to complete the work. He is required to complete the work. Understood? Everyone clear on this? Yeah. And as far as the audit is concerned, these financial statements, okay, these financial statements, who will prepare this? Management will prepare this. So when the management will prepare the financial statements, so they will use some assumptions, they will apply some judgments. Yeah. So some of the standards which they will apply. So the management will use some judgments. Yes or no? Yeah. So auditor is also required to take care of all of that. Now, can you give me an example of some of the estimates or some of the judgments which the management will use while preparing financial statements? Tell me. I'm not asking you anything about audit. I'm asking you about the accounting now. Tell me. Pawan is saying depreciation. Very good. Yeah. Hardik is saying depreciation. Great. So when it comes to the depreciation, so what do you mean? So in a way, we are trying to say that useful life would have been used. Now, can anybody say with 100% accuracy that the useful life is 6 years or 7 years or 10 years? Is it practically possible? Tell me. Lakshita is saying no. Afzal is saying no. Yeah. Vijay Lakshmi is saying no. So that means there are few judgments. There are few judgments. There are few estimates which the auditors need to consider. Which the auditors need to consider, which they need to rely on, which they need to factor in. So that is again a limitation. That is again a limitation on the part of the auditor. Yes or no? Yeah. And tell me one thing, that financial statements are prepared on going concern assumption. Yes or no? Tell me, going concern assumption, do you use that or not? Where did you read that? Tell me. That financial statements are prepared on going concern assumption. Where do you read that? Where does it come from? Hardik is saying yes, one. Very good. So you may be thinking that we are discussing about accounting. Yes, because that is what we discussed. That audit is all about application of different dimensions. So we are going to apply all of these. Now, if the going concern assumption is required to be looked at, so what does it mean? It means that the auditor is looking at some future events. That the auditor is looking at some future events. Yes or no? This means auditor is looking at some future events. Yeah. Now future events are subject to changes. Yeah. So this again poses a restriction. This again poses a limitation. Okay. Which the auditor needs to factor into. Why? Because these are inherent. These are very much which form part of the financial statements. So that is how financial statements are prepared. Can the auditor do anything about that? Tell me, can the auditor do anything about that? The answer is no. That is what science says. Yeah. So we are Lakshita, Nitesh, they are saying no. You can't help it. But that is how it has to be followed. Okay. Clear on this? Everyone? Any questions? So I think Sai has a question. Yes, Sai, please go ahead. I think Sai wants to speak up. Yes, Sai, please go ahead.
Sir, my doubt is just I'm asking whether it is a correct doubt or not. I don't know. Generally, as per standards of audit, management has to prepare the financial statements and auditor has to prepare notes to accounts. Auditor has to prepare notes to accounts, but practically balance sheet, financial statements are prepared by auditors only. Na?
See, as far as the financial statements are concerned, let me just correct you at one point that complete set, whether it is balance sheet, P&L, or the notes, which is all about disclosures, whose responsibility is that? Management. Auditor's responsibility is not the
No, their
preparation.
responsibility, but prepared by auditor.
See, at times, if the auditors are preparing that, if let's suppose you are saying, no, sir, we go and see that practically it is happening, so that is inappropriate. Auditors should not be doing that. Why? Because in such a case, they are not following the ethics. Okay. Let's suppose if you are the person who has prepared the information. Okay. Let's suppose Sai, you have the financial statements of a company. Okay. And you also become the auditor. Let's suppose you also become the auditor of that company. Or let's suppose being an auditor, if you are preparing the financial statement, so will you tomorrow find out, or will you want to report any error in that set of financial statements? Tell me, what are your thoughts? Will you ever report that?
That I am accepting, sir, but balance sheet preparation and all management is having that much skill, I'm asking.
No, no. So if management doesn't have that skill, that is something they will have to add on. They will have to bring that internally. That is how they will have to get into. Yeah. And this is what the auditor needs to take care. If you come across any situation wherein you are saying, no, sir, practically we see that the auditors are preparing the financial statements. So I'm saying that is inappropriate. That is unethical. Okay. That is against the principles of audit. Okay. So that should not be done as far as the audit is concerned. Understood?
Okay. Thank you, sir.
Great. All right. So it's good that you have been asking questions, and it's good that we have been discussing some of the practical insights around that as well. So let me just quickly get on to the next part. So now we'll pick up one case scenario. And before that, I understand Sudipta has a query. Yes, Sudipta, please go ahead with your query.
Good evening, sir.
Yes.
I'm asking that GST also required audit, that is different provision. So
Right.
GST audit and statutory audit can be done by a single auditor.
Yeah. So yes, that's correct. That can be done by the single audit.
Okay, sir. Thank you.
All right. So I understand Shruti has a query. Yes, Shruti. Okay, no worries. So let's move further. Now we'll pick up a case scenario. See, in case of a case scenario, what is it that you will get to see? That there will be a case scenario basis which some MCQs will follow. And you will have to answer all of those MCQs. MCQ means there will be some options. Out of those options, you will have to select one. And all of those questions, all of those options will be based on the case scenario that we are going to look at. Okay. So I'll also run this case scenario over here. But if you want, you can also refer your study material. Okay. So that's chapter 1 and page 1.19 you can look at. So if you want to refer the study material, you can refer that. But please don't refer the solution over there. Yeah. It's very, very important that you attempt this on your own. Please don't go to the solution. Okay. So let's look at this case scenario now. I can see one query from Srinivasan. He's saying, sir, can you give an example? See, future events we discussed. For example, we discussed about this going concern, which is all about the future events that the auditor is required to look at. And Goda is asking, sir, even the notes to accounts. See, I think we discussed the situation. Okay, so let's discuss this case scenario now. And please read this carefully. So whenever you come across any such things, you need to read that carefully, because basis this, a lot of questions will follow. You will have to answer those. Yeah. All right. So Rohit, Gurpreet, Ali, and Goretti are friends since their school days, based in Mumbai. They have cleared CA foundation examination in the same attempt, and now they plan to appear for CA Inter. All of them are avid news listeners and regularly keep track of business, even social media. They are trying to understand new subjects, including audit. Rohit, Gurpreet, and Ali have also started attending live coaching classes being conducted by the Board of Studies of ICAI. Goretti has not been able to join live coaching classes as yet. She was away on a holiday with her parents. Okay, maybe she didn't attend that. Now, however, she plans to catch it up with her friends very soon. Ali has also joined the classes, but he had skipped some lectures. During one informal get together, their discussion centered around a new subject of audit. Okay, so maybe they were discussing, all of these friends were discussing some of the things, and they come across some discussions. Okay, some of the things were discussed and they talked about audit. Audit was new to them. Yeah, I think exactly similar to maybe what some of you may be also finding right now. They discussed many things regarding its nature, scope, benefits, other general practical issues. Goretti was regularly keeping track of audited results of companies, okay, which are published in the newspapers. So if you go look at the listed companies, their financial information on a quarterly basis is available on the public domain. Okay, on the newspapers, on the website, there are a lot of portals where this information is available. So Goretti used to keep a track of that. Her view was that audited financial statements of companies give 100% guarantee to different stakeholders. So this was the view of Goretti. It is the main reason behind so much reliance upon auditing. Okay, so this was the thought process of audit. So I'm just hoping that you are understanding this case scenario. Huh? But Goretti could not, understand why wrongdoings in financial matters are being discovered after so many years have gone by. Okay, so there was a concern. So she was not very clear. Okay, so she was thinking that if the audit is done, then there is a guarantee that everything is all right. Then why does it happen that for a company which is audited, for a company for which financial statements have been audited, after a few years, you find that there are some wrong things which have taken place. Some frauds are discovered in respect of those companies. Okay, so that was the concern. So this is what she was not able to understand. Ali also concurred with her view. Ali agreed to this and added that when financial statements are audited, each and every transaction appearing in the books of accounts is verified. So this was the view of Ali as well. So Goretti had this view, Ali had the same view. However, he could not give clarity to Goretti. Okay, so both of them had the same viewpoint, but both of them were not clear as to why this is happening. Gurpreet was of the opinion that audit was conducted on the basis of sample checking. He was also of the view that audited financial statements are not a guarantee against possible wrongdoings in the financial matters of the companies. Okay, so now the third person, he had a different thought process as compared to Goretti and Ali. Clear? Not to be left behind, Rohit also jumped in the fray. And he agreed with Gurpreet and also added something of his own. So now, in this scenario, what do you find? That there were 4 friends, similar to what you do. They keep discuss about a lot of things. And currently, they were discussing about audit. Okay, they were just trying to understand what is audit, how this audit is performed, what are the objectives of audit, what is the outcome of audit. And over there, we find that 2 of the friends had a similar thought. Which friends were those? Goretti and Ali. As compared to other 2, Gurpreet and Rohit, because they had a different thought process. Everyone clear on the case scenario? Yes, quickly confirm. Are you clear on this case scenario? Yes, very good answer. Anirudh, great. Gurminder, everyone is saying. Priyanka is saying yes, very good. All right, so now, basis this case scenario, there are few questions. Okay, now you need to answer all of them. Yeah, all of you ready? Quickly, yeah, ready? You need to answer and please don't look at the solution. So don't go look at the solution in the study material. Okay, yeah, it's very, very important that you understand this and attempt this on your own. All right, because you'll have to also give the rationale. Okay, so if you answer this without the rationale, that will not be accepted. Fine. Okay, so now the first question. Though many of you have answered, Gurpreet was of the view that audited financial statements are not a guarantee against possible wrongdoings in the financial matters of the companies. What kind of assurance does audit of financial statements provide? It provides reasonable assurance, meaning a moderate level of assurance. It provides reasonable assurance, meaning a low level of assurance. It provides reasonable assurance, meaning a high level of assurance. It provides reasonable assurance, meaning an absolute level of assurance. So the question is, okay, Neetu, Alok, Joya, that which out of these options will you consider as the correct one. Okay, Tanya is saying D. Very good. Anirudh is saying C. Pranav, Anjali, lot of you are saying C. I have been missing out of. Priyanka is saying C. Pawan is saying C. Hasi is saying C. Angel is saying C. Adishri is saying C. Goda is saying C. Okay, Aisha is saying A. Very good. Can you give me the reason, please? Vijay Lakshmi is saying D. Vijay Lakshmi, what's the reason? Pallavi is saying C. Pallavi, what's the reason? What's the reason? Mohammed is saying C. What is the reason? Tell me. Amit is saying reasonable assurance with a high level. Okay, Joya is saying A. Then Meera is saying C. Neha is saying C. And Dilip is saying C. Subiksha is saying A. Okay, great. Nitya is saying audit provides high level of assurance. All right. So now, I think this is quite clear. There's no judgment. Okay. There's no viewpoint. There's no interpretation which is involved. We discussed that when it comes to the audit, reasonable assurance is provided. Yes or no? Yeah. And with the reasonable assurance, absolute assurance is not provided. Because if the absolute assurance will be there, that will become a guarantee. Which is not right. Yes or no? So of course, D is not possible. D is not possible. Now the question is that A and B, is it possible? There again, no. Why? Because when it comes to audit, high level of assurance is given. High means level at which third party will become comfortable. If let's suppose third party will appoint an auditor, on the basis of which third party will try to get the comfort. How will that comfort be achieved by the third party? Tell me. How will that comfort be achieved? If you give the low level of assurance or medium level of assurance, it has to be high level, but it is not 100%. So that's why we are saying it's not absolute, but of course it's the high level. So what is the correct answer? C. What is the correct answer? C. All right. Great. Okay. So we are not yet done. Next question. Question number 2. Rohit added. Now we are talking about Rohita. You need to remember as to what was the viewpoint of which of these persons. Rohit added that the auditor can force an employee of the company to provide him required information and the documents. The question is, can the auditor force the companies or the employees to provide him the required information and the documents? Option A, he can do so. Why? Because it is necessary. Otherwise, auditor will not be able to check. Option B, yes, he can do that. There are express rights. It's the right of the auditor. Option C, no, he cannot do that. He can only request for providing the information, but it cannot be forced. Option D, no, he cannot do that. He has no right. Therefore, forget about forcing someone. So what do you think? Okay, Shruti is saying B. Avinash is saying C. Joya is also saying C. I missed out a lot of responses. Okay, so I missed out a lot of responses. Pooja is saying C, but I can see a lot of you are saying C. Nitish is saying A. Okay, Ramya and Venkatesh, they are saying C. Anjali is saying A. Bhaskar is saying C. Bhavika is saying A. What about others? Okay, Saundarya is saying B. Pallavi is saying B. Nitish is saying A. Vibhor is saying B. Siddharth is saying A. Okay, great. So I can see majority of you are talking about C. But of course, there are a lot of students who think it should either be A or B. So I can see a lot of responses towards A and B as well. Okay, so let's now try to understand this. See, can we say that auditor has the right to obtain the information from the management? The answer is yes. Okay, there's no doubt that auditor has the right. Okay, so that means right is there. But with that right, can the auditor force someone? Answer is no. Because that is not the job of the auditor to go and force someone. So if let's suppose an employee is not providing something, so with the auditor, go and start shouting at him. Will he start beating him for that information? Will he start fighting with that person for that information? Tell me. Tell me. No, that is not the job of the auditor. He has to go there, he has to request for the information. Of course, he has the right. So that's why he will keep requesting till the time information is not received. But he cannot force. Okay? Force is not something which he can apply. Yeah? If the required information is not available, if that is not provided to him, what will he do? He will report that. He will report that, but he cannot just force anyone. Yeah, Nitish is saying now I'm clear. Very good. So I think Komal and Aisha were also thinking A. So I understood you got this. Huh? So now in the given case, what should be the correct answer? Therefore, C. Answer should be C. Clear? Everyone clear? Okay. Great. All right. So shall we move further? Yeah. Ready for the third question, everyone? Okay, so Isha is now clear on this. Great. Vanita is also clear. All right. So let's move further. Point number 3. Question number 3. Ali had listened in one of the classes that audit covers all the aspects of an entity and concluded that each and every transaction of the entity is verified by the auditor. Goretti also seemed to be in agreement with Ali, but she was of the view that besides this, it also meant that audit should be organized to cover all the areas of an entity. Which of the following statements you believe will be appropriate? Only Ali is correct. Only Goretti is correct. Both Ali and Goretti are correct. Both Ali and Goretti are not correct. Yes, over to you. What do you think will be the right answer? Raju is saying D. Vidya is saying D. Anirudh is saying D. Ashdeep is saying D. Kasak is saying D. Prati Malani is saying D. Very good. Sarvesh is saying D. I can see a lot of responses, but I can find that this time around everyone has got the same answer. Aisha, Joya, Adishri, Goda, Sai Charan, Karan. Very good. Pallavi, Anuradha, Rana, very good. So everyone is saying D. Why? Because audit is not about checking each and everything. Of course, it covers a lot of aspects of the entity. There's no doubt about it. But in respect of all of those aspects, 100% checking cannot be done. Yeah. So that's why this expectation on the part of Ali and Goretti is inappropriate. So that's why what should be the right answer? Exactly the one which you have answered. That means D. Okay. So Alok, Meera, Kazma, Mohammed, they all answered B. And I'm hoping, Avinash, you are now clear on this as to why D should be the right answer. Okay. Now moving further. Question number 4, and this is what you will get to see in the exam also. So that is how you need to prepare. Okay. All of them also discussed. All of them means all these 4 friends who were sitting together. They were chatting. They discussed about benefits of audit. Which of the following is not a likely benefit of audit out of these 4 options? Since audit is connected to future events, audited information can be easily relied upon by users. Errors or frauds may be discovered during the audit. Government authorities can make use of audited accounts for different purposes. It can help in bringing out deficiencies in maintenance of financial records. Which out of these options you think will not be the benefit of audit? Over to you. Great. So here again, so I can see a lot of responses. So Amira is saying A, Anirudh is saying A, Ritika, Rachna, they are saying A, Manvi is saying A, Muskan, Bhumika, they are saying A, Tanu is saying A. Okay, so now this time around as well, I can see everybody answering. Somya is also saying A. Priyanka, Preeti, they are also saying A. Very good. Dilip is also saying it should be A. What about others? Pavan, Pallavi also are going with A. Absolutely, because if you look at B, C, and D, that is clearly a benefit of audit. Okay, but if you look at A, to say that because it is connected to future events, so that's why it should be easily relied upon by us. Does it make sense? The answer is no. Answer is no. Yeah, so that's why Meera, Alok, Adishri, Goda, they are also going with A. All right. Now let's move on to the fifth and the last question, hopefully. Then we'll come back to our discussion. Goretti told her friends that she had read a news report about how a company had misled its auditors by producing some fabricated documents, means forged documents, wrong documents. Which of the following statements seem to be appropriate in this regard? Okay, so you need to check all these statements. See, in the exam, a very common mistake is made. So let's try to understand that mistake. In the exam, whenever you are given these options, generally, what is it that you will do? You will not read all the options. Maybe you will read one or two options and you will just answer that. But that may not be right. Okay, just make sure that you are reading all the options and only then you should answer. Because there could be some of the options which are quite close in terms of the meaning they are trying to convey. Yeah, so that's why it's very important that all the options are read by. Only then you should answer that. Okay. Okay. So now I can see Avinash answering this. I'm hoping that Avinash you have read and then you are answering. Okay. Okay, so let me just read all the four statements. It was wrong on the part of the auditor to rely upon fabricated documents. He must have discovered as it same falls within his scope. B, although it was wrong on the part of the auditor to rely upon fabricated documents, he cannot do anything in this matter. He has to report on the basis of documents provided to him. He has no duty in this regard. C, auditor has to conduct audit by exercising professional skill. But he is not an expert in discovering the genuineness of the documents. Hence, the management consisting of dishonest persons may have led him to rely upon fabricated documents deliberately. D, management cannot mislead auditor due to high level of knowledge and the expertise which auditor carries. The above is an outlier. Outlier case means one of the rare odd cases. Now, in the given situation, which out of these options you will select and why? Okay, though you have answered a lot of these, Adishri is saying it should be D. Okay, I missed out a lot of responses. Let me just see. Anuj is saying C. Tisha is saying C. Dilip is going, oh, I missed out. Subiksha is going with D. Pavan is saying B. Nitish is also going with B. Muskan is going with D. Ritika is saying B. So I can see a lot of B and D as well. Yeah. Yeah. So majority is C. Sarvesh is saying C. Vanita is saying C. Vibhor is saying C. Sudipta is saying C. Okay. Then the Pranav is saying C. What about others? Amit, Meera, Shreya, they are all going with C. Okay, Karan is going with C. Rachna is saying C. The documents are prepared by the management, so the auditor will rely on that, and that's why that's his job. That should be C. Lakshita is saying C. Vijay Lakshmi, Meera, they are also going with C. All right, so let's try to understand. See, in this sort of situation, if you look at the question, just by going through the question, you will not be able to answer. Why? Because in a way, the statements or the options, they carry some part of the question. Yeah, so that's why in such type of questions, you will be in a way forced to read all the options. But as we discussed, that in the exam, please make sure that you are reading all the options and then answering this. Okay. Now, as far as the auditor is concerned, can the auditor just check the genuineness of the document? We discussed no. And if the fraud is committed by the management, which is sort of intentional, which is perpetrated by the management, okay, so they can always mislead the auditor. Why? Because to a certain extent, auditor will have to rely on the documents which are provided to him. Of course, he will apply his diligence. He will apply his knowledge. He will apply his skill set. He will apply his experience. But beyond that, can he do anything? The answer is no. So that's why, what should be the correct answer? C. Okay. What should be the correct answer? It should be C. Yeah. All right. Okay. So let me just go through some of the questions. Any questions, any doubts? If you have, we can discuss your questions before we move further. Quickly, any questions, any doubts? If you have, then we'll move further. Okay, Amit is asking, sir, auditor is, I think Amit has answered this. Okay, great. What about others? Any more questions, any more doubts if you have? Chitra just responded. Maybe I saw her response now, but that was good. Nitish is saying, sir, option C samajh nahi aaya. Okay, no worries. Let me just go back to this particular option number C, and let's try to understand this as to what is it that has been conveyed in this option. See, auditor has to conduct audit by exercising professional skill. Means whenever audit will be performed. So what is it that the auditor will do? Auditor will apply his knowledge, he'll use his skill. Yeah. Is that part clear to you? Yeah. So auditor will use his skill. Yes or no? Yeah. Clear? Nitish? All right. So now moving further. Then it says, but he is not an expert in checking the genuineness of the document. So let's suppose an invoice is made available to him, but that is forged. To a certain extent, auditor can check that document. But whether that is fraudulently prepared, that is forged, that is fake, can the auditor go and investigate that? Answer is no. If let's suppose the management is involved in this fraud, it is done intentionally. So the management can always make the auditor understand that the documents which are provided are the documents of the company. So that's why, what is it that the auditor will do? Auditor will definitely lie, because auditor will look at some of the things to check. So if let's suppose he has to check sales, so what is it that he'll do? He'll check the sales invoices. If the management will say that these are the sales invoices that we have booked in our system, but maybe those were fake. So can the auditor do anything about that? No. Yeah. So that's the limitation. But at the same time, the maximum diligence which is required to be applied, has that been applied by the auditor? The answer is yes. Okay. Clear on this now, Nitish? Muskan is asking, sir, what is done in the case when the auditor finds that the company has misled? See, if the auditor gets to know about it, that the company is misleading and there is some fraud, then the auditor will have to increase his testing. He will increase the extent of his audit procedures. He will check more things because his reliability will go down. Okay? Yes or no? Yeah. Pavan is saying, sir, if the auditor know about the fraud, but he doesn't have the proof and he can't ask for fabricated documents, what will he do? Again, see, if the auditor has a doubt, it's not about he knows, he has a doubt. Let's suppose he suspect there is a fraud. So what is it that he'll do? He will have to design his audit procedures in a manner that he can get more comfort. Why? Because his liability has gone down. Okay, his comfort level has gone down. Understood? Moni is asking, sir, what if an auditor finds the document is fabricated? Will he be able to question the management? Of course, yes. Of course, yes. Because that's a mistake. Whether that is intentional or unintentional, he will ask the management. Yeah. Then I think Hardik is asking, sir, have you ever caught fraud in the company while auditing? Yes, of course. So these things keep happening. And on a practical scenario, okay, there are a lot of things which you will come across as an auditor, okay, which you will catch as an auditor. But what is it that you will do? You will look at the extent, you will look at the quantum, you will look at the volume, and accordingly you will decide the implications. Okay, Kasak is asking, sir, is the audit done on a regular basis? Yes, annually it's done. Muskan is asking, but is there any time limit restrictions for recognizing the fraud? Yes, till the time this audit process will go on, auditor has to find out. Because once the audit is completed, he has submitted the report, he's done. Okay. Lakshita is asking, sir, if we know about the fraud, then can we mention that in the report? Yes. That again depends on the volume, on the quantum which is there. And this is again something which you are going to discuss in more detail in the subsequent sessions. Okay, Pawan is asking, sir, when to do audit? See, we discussed that audit is all about financial statements. So when the financial statements will be prepared, that is when you will audit. Vijay Lakshmi is in fourth one also. Sure. So let's go to the fourth option. So fourth option says management cannot mislead the auditor. Why? Because auditor has got great level of knowledge. He is expert. But is that correct? See, to a certain extent, it's correct that the auditor is an expert. But can the management not mislead him? Of course, yes. Why? Because auditor is not an expert of checking whether the document is forged one or not. Okay, to say that the case is one wherein the auditor could have checked everything, okay, and he didn't do that, that will be inappropriate. Okay, that is what this option number D says. Yeah. See, I can see a lot of questions coming up as around this audit process, that what if a fraud is discovered? What if some problems are found out? What if auditor has a concern? So let me just discuss this situation with you. Okay, and let me just go to that sort of, working, and then we'll discuss that. Now, let's suppose there are two parties. So which parties are those? Let's try to understand in this manner. So say there is a company T Limited. Okay, this is the company which is getting audited. And there is an auditor. Let's suppose this auditor is, say, Amit and Company. So this is the audit firm. Now, during the course of audit, auditor will check the financial statements. So company prepared the financial statements, which is being checked by whom? Auditor. Auditor will check that. Correct? Now, if let's suppose there is a fraud, say in relation to revenue recognition. Now, what is the fraud? Let's suppose the fraud is what? Say sales have been inflated. Company has reported a sale of rupees 100 crore. Actually, okay, so this is the reported number. But actually, the sale is, let's suppose the sale amount is 95 crore. So this is the actual amount of sale. Yeah. So let's suppose this is the fraud. And let's suppose this fraud is caught by the auditor. Now, in this case, what is it that the auditor will do? Clearly, there is a fraud. So that's why the reliance which the auditor will place on the management. Let's suppose if you are the auditor and I am the company, let's suppose I am the management of T Limited and you are the auditor. So tell me, will you be able to rely on me? Tell me, if let's suppose I am the management and you are the auditor. So tell me, forget about this revenue. Will you be able to rely on me? Vaishnavi is saying no. Nitya is saying no. Isha is saying no. So that means over and above this error in relation to sales. So in relation to sales, there is clearly an error. Okay, whether you call it as fraud or error, it's an error. Yeah. So this error is caught. But what about other items? In relation to all other items, the comfort level of the auditor will go down. Yes or no? The comfort level of the auditor will go down. So that's why, what will be the implication? What will be the implication? Auditor will ask the management to rectify this. Number one, yes. And in respect of all other items which are there in this financial statements, whether we talk about various other assets, liabilities, okay, incomes, other income, expenses, auditor will increase. Auditor will increase. Auditor will increase extent of testing. Means if he was checking, let's suppose a sample of 25. Now I'll say no, I'll not get the comfort. I'll have to check 50. Maybe I'll have to check 75. Yes or no? So if let's suppose you are the auditor and I am the management, so what will happen? You will say, no, I don't agree with you. You are liars. You are providing fake information. So my trust is gone. I have lost the trust. So that's why I'll increase my check. That is going to be the second implication. And of course, there are going to be a lot of other implications that we are going to discuss. Okay, as you will move further in terms of your subsequent sessions, you will discuss that in more detail. All right. Yeah. Okay. So now what we can do is maybe we can just take a quick break. Okay, maybe for 5-10 minutes, and after the break we'll continue. Fine. Yeah. So let's take a quick break. Huh? Right. All right, great. Welcome back. So let's continue with our discussion. All right, so now moving further, let's try to understand about the meaning of assurance. Okay, so far we have discussed about audit. Now we will be discussing about the meaning of assurance. Now, what do you mean by assurance? See, assurance and audit have a lot of similarities. Okay, but let's again try to understand this in the context of audit first, and then we'll get on to the greater details of assurance. We can say that any engagement or any project, which involves checking, which involves number one, and on the basis of checking, so we are saying which involves checking of information. And on the basis of checking of information, if some report is required to be provided. Report means which is required to be signed by the practitioner. Now I'm using a term practitioner instead of auditor. Why? Because we are not only talking about audit, we are talking about any engagement. For example, say there is a company AB. This company has assigned a person B and company for checking of some financial information related to AB. Now you may be thinking, but sir, this is audit. You are absolutely right. But in this audit, what is it that B and company is required to do? B and company will have to check this information. And after checking the information, B and company will be required to express an opinion or provide a report. Yes or no? Yeah. So this is exactly what you do in relation to assurance. But assurance doesn't always mean audit. Why? Because you can say audit is a type of assurance, or you can say audit is one type of assurance. Now, what does it mean? What does it mean? It means that there could be various types of engagements. There could be various types of engagements within assurance. And one of that engagement happens to be audit. Means audit is one of the types of assurance. Yeah. Now you may have a question that, sir, this is understood that audit is a type of assurance. So what else could be there in case of an assurance and which is not audit? So we'll talk about that. Okay. So you can just park that for some time. We'll talk about all those projects which are not audit, but which will fall within the umbrella of assurance. We'll talk about that. Okay. As of now, you can just simply in a layman term understand that anything or any project which involves checking, on the basis of checking, an output is required to be given in the form of a report, which is required to be signed off. That is what you call an assurance engagement as. Okay, exactly similar to what you do in case of an audit. But audit is a subset, or you can say is a part of assurance, or you can say only one type of assurance. Yeah, I understand. You have some queries now. Mohammed has a query. Yes, Mohammed, please go ahead with your query. Mohammed, I understand you have a query. Yes, please go ahead. Yes, Mohammed, please go ahead.
So, auditors has provide assurance.
Sorry. Mohammed, I couldn't understand your query. Can you please repeat?
Sir, who provide assurance for engagement?
Okay, so now as far as engagement is concerned, so engagement is what discussed. Engagement means any project. Okay, engagement means any project. Now this project could involve work which is in the nature of audit. Yes or no? Yes, this work could involve audit. Now, if this will involve audit, then who will provide this assurance or who will provide this service? It will be the auditor. It will be the auditor. Okay, clear on this? Are you clear on this first part? Everyone? Everyone, please confirm. Are you clear on this first part? Yes? Suniti, Vanita, they are saying yes. Great. Now, you have a question that, sir, what about other projects which are not audit, but which will fall within this umbrella of assurance? So I told you that please hold that for some time. We'll discuss about that. And once we discuss, then we'll come back to that. Okay? Clear on this? Now, let's get into this understanding of assurance. As far as assurance is concerned, we discussed that it will involve few parties. What are those parties? Practitioner. In case of an auditor, in case of an audit, this practitioner will be auditor. And in case of an audit, this responsible party will be the management, or you can say the company. And of course, there will be some stakeholders. Intended user means stakeholders. So these are going to be the parties. Correct? And there will be a subject matter. Subject matter will be what? What will be the subject matter? Financial statements. Because financial statements will be required to be audited. Yes or no? Because financial statements will be required to be audited. Correct? Now, when the financial statements will be audited, so what will become the basis for audit? The basis for audit. Can you tell me what will become the basis for audit? Yes, any thoughts from your side? We discussed that audit is all about assuring, all about checking that the way it is required to be prepared, whether it's been prepared in the same manner or not. Means whether the information has been prepared in the manner in which it was required to be prepared. Okay, so which means if we are talking about financial statements, okay, in such a case, what will become the basis of preparation of financial statements? Accounting standards, guidance notes, laws, rules, regulations. Yes or no? Yes or no? All of these will become the basis for preparation of financial statements. So that's why for their audit, what will be the super criteria? To check whether the financial statements have been prepared on the basis of accounting standards, on the basis of guidance note, by applying the relevant laws and regulations or not. Okay. Now clear on this? Now clear on this? All right. So now the next step in case of an audit be about obtaining the evidence. Because if you will check something, if you'll check financial statements, so you'll need something to check. And there again, we discussed that a lot of information will be there. And for each and every information, some supporting document checked. Some supporting document checked. What do you call that as? That is called as evidence. So the supporting documents that you obtain, the information that you obtain for checking, what do you call that as? Evidence. That is called as evidence. Yes or no? That is called as evidence. Now, at the end, once this audit work is completed, what will be provided? A report will be provided. A report will be provided. What will be the form of that report? In case of an audit, we discussed as to how that report is prepared. Similarly, when it comes to any other engagement, we'll also discuss as to how that particular report will be prepared. So depending on the type of engagement it is, that report will have to be looked at. That report will have to be looked at. Now, let me just discuss some situations with you. We'll just try to look at some examples with the help of which we'll try to get into some more details. Okay, so we'll try to get into some more details with the help of an example. Okay, so now let's talk about an engagement first of all. And this engagement is what? This engagement is an audit engagement. So this means that in this engagement, we'll have to perform some procedures. What are the procedures we'll perform? Can you tell me what are the procedures we'll perform in case of an audit? Yes, over to you quickly. What are the procedures we'll perform? Testing of details. Testing of details. What do you mean by testing of details? Example, we'll check the purchase register. Okay, another example, we'll check the computation of depreciation. Okay, any other example can you give me? Any other example can you give me which will follow for audit, for testing of details? Great. Pranav is saying, sir, checking the debtors balances. Sunidhi is saying, sir, checking the revenue. Vijay Lakshmi is saying, checking payroll. Great. Similarly, there could be a lot of items which the auditor will check. Correct? Now, this testing of detail or this checking of various information is done by the auditor in a manner wherein at one place, auditor will obtain the information. So at the first place, let's suppose if the auditor is required to check depreciation, can you tell me what are the things that auditor will obtain? So let's suppose if depreciation is required to be checked. So what are the things that the auditor can obtain? Yes, over to you quickly. What are your thoughts? If let's suppose tomorrow you are required to check depreciation. So what is it that you will check? Yes, quickly. Okay, great. So let me just write down. Okay, Moni is saying useful life. Pranav is saying asset value. Then Rachana is saying cost of asset. Okay. Then Gurminder is saying life. Vaishnavi is saying residual value. Rachana is saying scrap value. Rate of depreciation. Yeah. Aisha is saying method of valuation. Pawan is saying expenses. So there are some procedures you have discussed with. So let me just put it down. Okay, let's try to understand this now. Now for depreciation, what's the first thing you will do? You will obtain calculation. Okay, maybe the management has prepared this calculation in an Excel file. Okay, so you'll obtain this Excel working. Yes or no? So that's the first step you will follow. Correct? Then you will check the working. How will you check the working? You will check the calculation. You will check the formulas. You will check the useful life, whether the useful life is right or not, whether the useful life is as per the company's policy or not. whether the gross block has been picked up appropriately, whether the additions have been considered correctly, whether the deletions have been considered correctly. Some of the additions you'll also check by checking the invoices. Some of the deletions you will check by checking the invoices of sale. For additions, you will check the invoices of purchases. Yes or no? So these are some of the procedures you will consider. Yes or no? Tell me. Yeah. So some of these procedures you will follow. Over to you quickly. Quickly, yeah. Great. So you're saying yes. Now, there is another procedure that you can follow. Let's try to understand. Say, in the current year, depreciation, let's suppose, is 1000. Whereas previous year, depreciation was 800. So do we have a variation here? Do we have a variation? Tell me, what is the variation? Do we have a variation? What is the variation? Tell me quickly, what is the variation? What is the percentage variation? Afsal is saying 200, Nitish is saying 200, VR is saying 200. What is the percentage variation? What is the percentage variation? 25%. Yes. So in this case, what do you find? That the depreciation has gone up by 25% as compared to previous year. Yes or no? Yes or no? So will you check this or not? So let's suppose if you audit, will you check this or not? Tell me. So this is again one of the methodology you will follow. So you'll compare the previous year figures. You will say how the numbers are changing year on year. Yes or no? Yeah. Over and over that. So, okay. So now this is the second procedure you will want to apply. And there is another procedure. Will you perform inquiries with the management? Will you perform inquiries with the management? Yes or no? Will you perform inquiries with the management? Of course, because you will go discuss calculations with them. You will find out whether the numbers are changing, how this calculation has been done, what has been the basis of calculation. Okay, whether this has been done in an appropriate manner or not. All of these things you will do. Yes or no? Correct? Now, broadly, if you look at, I'm just saying broadly, if you look at, there are three types of procedures we have discussed. If you look at broadly, there are three types of procedures we have looked at. This is A, this is B, this is C. The first procedure in which you have checked the calculations, wherein you are looking at the supporting documents, wherein you are looking at the workings of the management, wherein you are looking at lot of information. You are looking at the vouchers, you are looking at the ledgers, you are looking at books of accounts. What do you call it as? This is called as testing of detail. This is called as testing of detail. Okay. This is what you call as testing of detail. Right? Right? Clear on this? Okay, so we can say that this is our first procedure. This is our first procedure. Testing of detail. The second procedure which you look at, procedure number B, this is called as variance analysis, or you can say it's a kind of limited procedure. It's a kind of limited procedure. You can also call it as analytical procedure. Analytical procedure. The variance analysis which you have done, okay, wherein you have not looked at the document, you have not looked at the supporting documents. What did you do? You did the variance analysis. You did the comparisons. You tried to find out as to how the numbers are changing. And the third procedure is what? It's all about discussions and inquiries with the management. It's all about discussions and inquiries with the management. Are you clear on these three types of procedures? Quickly confirm. Are you clear on these three types of procedures? Everyone, huh? Vinita, Afsal, they are saying yes. What about others? Quickly, Muskan is saying yes. Okay, so now this is going to be very, very important for you, because if you are clear, that means you have discussed, you have understood one very, very important part. Uday is saying, sir, can you please again explain B and C? Sure. So let's discuss this B and C again. See, in procedure type A, you are looking at the calculations. You are looking at the working files. You are looking at the supporting documents. But in procedure type B, are you looking at the calculation? Are you looking at the procedure? Are you looking at the supporting documents? Tell me, Uday, in this procedure type B, are you doing all of the things which you have been doing in procedure type A? Tell me. Over to you quickly. I'm waiting for a response. Tell me, Uday, are you doing all of the things which you are doing in procedure type A? Priyanka is saying no. What about Uday? Quickly. What about others? Tanu is saying no. Nitish is saying in procedure type A, we are checking the working. But in procedure type B, we are not checking the working. We are just looking at the numbers, doing the comparison and checking as to how the numbers are changing. But we are not looking at the supporting documents. We are not getting into the evidences. Yes or no? Uday, I'm just hoping you are with me, waiting for a response. Yeah? Okay, great. So Uday has understood. Now, if you look at procedure type C, in this procedure type C, what is it that you are doing? You are only going and discussing with the management. Let's suppose if you go and ask the questions to the accountant, you only inquire. You don't look at any document. You don't look at any working. What are you doing? You are just going and making the inquiries. It's all verbal. It's all verbal, which is based on discussions, which is based on your knowledge of the documents. But no checking is there. No underlying checking is there. Yeah. So what do you call it as? It's the third type. It's only discussion, or you can say it's all about inquiries. It's all about inquiries. Now, how is this relevant? Let's try to understand. See, in case of an audit, you do all these three things. In case of an audit, you do all these three. Okay. But sometimes some projects are awarded. Sometimes some projects are awarded. Or you can say there are certain projects in which you are not required to perform this procedure type A. Okay, you are not required to perform this procedure type A. So tell me one thing, that if there is a project in which procedure type A is not done, only B and C are done. In which only B and C are done. A is not done. A is not done, only B and C are done. In such a case, will you call that project as audit? Over to you. Over to you quickly, everyone. If there is a project wherein procedure type A is not performed, only B and C is done, will you call that as audit? Soumya is saying no. Isha is saying no. What about others? Adishri is saying no. What about others? Anish is saying no. Again, I'm missing a lot of responses. Huh? So Tanya is saying no. Chitra is saying no. Uday is saying no. Very good. So that means we have now understood that if there is a project which involves some procedures, I'm just changing the term, which involves some procedures, those procedures exclude this procedure A. Those procedures exclude that procedure type A. Then of course, we cannot call that as audit. We cannot call that as audit. So then you will have to name that project or not. You will have to put a name to that project. You will have to put a name to that project. Yes or no? So what will you call that project as? That will be called as, that project will be called as a review. You will call that as review. Okay, why? Because in this case, your procedures are lesser as compared to what you are doing in case of audit. Clear on this? Everyone clear on this? Any questions, any doubts if you have so far, please ask me. This is a very, very important part. Yeah. So now, in such a project, what will be the name that you will want to give to that project? You will name that as review. Okay, you will name that as review. Clear on this, everyone? Yeah. All right, great. Any questions, any doubts if you have? No? All right. So now let me just put down one question and let me just test this. So you are saying that you are clear. Great. So let me just check this as to whether you are really clear on this or not. Okay, let's suppose there's a project. So now we are looking at the financial statements of a company. Okay, so this is a question for everyone. Okay, we are looking at the financial statements of a company wherein this is the balance sheet. This is the balance sheet wherein current year figures are given, previous year figures are given. Okay, and the project involves, or maybe the management has engaged. So now in this case, what has happened? This company has engaged, say, a third party. Which party is that? Let's suppose this is Neetu and Company. This is Neetu and Company. So let's suppose this party has been engaged. Okay, so this is a firm of auditor which has been appointed. Sorry, this is a firm which has been appointed. I wrongly mentioned this as auditor. This is a firm which has been appointed. Now, what is it that this firm is required to do? This firm will perform analytical procedures. This firm will perform analytical procedures. This firm will perform analytical procedures. Analytical procedures in relation to financial statements of this company. Okay. And after that, after the work is completed, Neetu and Company is also required to provide a report. So they are required to provide a report. Okay. Now, in this case, can you tell me what will be the nature of this engagement? Can you tell me what will be the nature of this engagement? Yes, quickly. What will be the nature of this engagement? Rishita is saying review. Okay. Then I think I missed some responses. Vaishnavi is saying review. Okay. Nitish is saying it should be audit. What about others? Then I think Pooja is saying it should be review. Uday is saying it's not an audit, it's a review. Garima is saying it's an audit. We'll call it as audit. Soumya is saying it should be called as an audit. Venkatesh is saying it's a review. Ilaya is saying it should be audit. Okay. What about others? Lakshita is saying it should be review. Then Nitish is saying it should be audit because analytical procedures are followed. Now, in this case, please understand that the management had specified the scope that only analytical procedures can be performed. Can Neetu and Company apply the testing of detail? Tell me, if tomorrow Neetu and Company wants to apply procedures related to checking of details. Can that be done? Can that be done? No. Can you tell me why? Because that is not the scope. Management has clarified, management has laid out the scope of Neetu and company. So that's why, can you call this engagement as an audit? The answer is no. Answer is no. So that's why you should not get confused. Whenever we talk about a financial statements, whenever we talk about a report, whenever we talk about an arrangement between a company or a firm, you should not get confused and you should not assume that it's going to be an audit always. Okay, so that could be another type of engagement, another type of assurance engagement. Now let me just say, now this could be another type of assurance engagement. And which type of assurance engagement you will call it as? Review. You will call it as review. Everyone clear? Yeah. So that's why we can say that assurance type engagement. Okay. Of course, there will always be of two types. There are other types as well, but they will always be of two types. One wherein will perform the audit, one wherein will perform lesser number of procedures. One wherein will perform lesser number of procedures. So that's why you will call it as review. Now tell me one thing. If let's suppose you are the management of the company. If let's suppose you are the management of the company. Okay. And you have asked me to perform review and not audit. Fine. Or let me just put down one more question. So let me just go to this example again. Okay, so let me just say that there are two companies. Yeah. Say there is a company A Limited, which has appointed, say, Lakshita and Company. Sorry, I missed out. So say there are two companies, A Limited and B Limited. A Limited has appointed Lakshita and Company, and B Limited has appointed, say, Shreya and Company. A Limited has given the scope of audit. B Limited has given the scope of review. So Lakshita and Company will be required to audit the financial statements. Shreya and Company will be required to do the review of financial statements. So tell me one thing, that out of these two companies, which company will get more comfort after the engagement is completed? Which company will get more comfort? Yes, quickly. Sai is saying, no, I'm asking about company. I'm not asking about the auditor. So which company will get more comfort? Niveta is saying A Limited. Okay. Then Bhavik is saying A Limited. Okay. Raju is saying A Limited. What about others? Yeah. Bhumika is saying A Limited. Lalita is also saying A Limited. So that means we are now very, very clear that A Limited is the company which will get more comfort. Can you tell me why? Okay, of course, you're saying A Limited will get more comfort. There again, Amit, Joya, Shreya, Goda, Mohit, Komal, Aisha, they are saying it should be A Limited. But can you tell me why? Why will A Limited be more comfortable after this engagement is completed? Nitya is saying because audit is being performed, which is wider in scope. Vanita is saying because it will provide high level of assurance. It will provide high level of assurance. Tanu is saying because scope of audit is wider, sir. Our testing of details, it's an additional procedure which the auditor will do, which B Limited will not get to see. Pranav is saying because audit provides reasonable assurance. Yeah. So there we are. Now let's try to understand about this. In case of audit, procedures applied are more. Scope is wide as compared to review. So that's why, where do you become more comfortable? A. Why? Because it's an audit. Why? Because the level of assurance. What do you mean by assurance? Comfort. Because the level of comfort, the level of assurance is greater in audit. This is greater in audit. So when it comes to audit, you can say it's greater as compared to review. Yeah. So now the level of assurance in case of an audit, what do you call it as? Technically, under audit, we are saying the level of assurance is more. The level of assurance is higher. And under review, the level of assurance is lower. But technically, if you are required to answer, then what will you call it as? Technically, you will call it as reasonable assurance. And technically, in review, what will you call it as? Limited assurance. You will call it as limited assurance. Everyone clear on this? Yeah, because this is again very important. Why? Because one, you get to understand that assurance engagement has got two types. Okay, so far we have discussed two types. Second, in respect of these two types, what are the differences? Okay, clear? Everyone, any questions, any doubts if you have? Any questions? I understand Sai has a question. Yes, Sai, please go ahead with your question. Yes, Sai, over to you. What is the question?
Sir, I am asking, we can use the wording only reasonable assurance only, no, sir. We cannot use high level of assurance like that. We should not use it, sir.
See, if you look at the technical term, okay, of course, when you provide the report, in case of an audit, what term you will use? Reasonable assurance. But when you provide the report for review, what term you'll use? Limited assurance. But as far as your understanding is concerned, as far as the parties are involved, as far as the stakeholders are involved, they should get to know. And of course, it's all about you. You should get to know that what is the difference between these two. Okay, so that's why we are discussing this. So tomorrow, if let's suppose you are required to explain this, that is how you are required to explain this. Okay, that is how you are going to explain this. Clear on this?
So we should use the reasonable assurance wording only.
No, of course you'll use that, but let's suppose if you are asked as to what do you mean by reasonable assurance, so how will you explain? You'll say wherein the level of assurance is higher.
Okay.
Understood?
Okay.
Yeah? Okay. Great. So Amit has a question now. Amit is asking, sir, is the review basically conducted before the accounts are audited? That figures are whether those are correct or not. If not, then when it is conducted? See, that again depends. That depends on the expectations of the management. That what is it that the management is trying to achieve? Because we discussed that why is audit performed? Similarly, we need to understand why is review performed. Now, as far as its legal requirements are concerned, every listed company is required to produce their financial results on a quarterly basis. Okay. If some of you know about it, every listed company in India is required to produce provide to produce their financial results. And those results should at least be reviewed. So they can always be altered. But if the management doesn't have time, okay, if the company believes that every quarter they cannot get that audited, so at least a review should be performed. Okay, so therein the companies follow this approach of review rather than going for audit. Why? Because the time frame, the period which is involved is significantly higher. And we have discussed as to what is the reason for that. Mohit is asking, sir, can you please give some examples of review engagements? Yes. So this example which I have just given, okay, so this is all about review engagement. So if let's suppose, say there is a company, let's try to understand about review. Huh? Okay, let's suppose there is a company. Now, which company is this? Say PQR Limited. Now, what is it that PQR will do? PQR will prepare its financial statements from 1st April to 31st of March. Yes or no? Yeah. But if let's suppose this company is listed, listed means it is listed on the stock exchange. Then every quarter, 30th June, 30th September, 31st December, for every quarter, okay, this company will be required to prepare its financial results. And these financial results, as per the regulatory requirements, could be reviewed. Instead of audit, a review can be performed on that. Okay, and that will suffice. That will suffice doesn't mean that audit should not be done. So we are saying if only review is done, it's okay. Understood? Mohit, clear on this now? Yeah, Mohit, clear? Anyone else? Any more questions? If you have any more doubts, if you have. Okay, so Vijay Lakshmi has got a doubt. Can you please repeat, Vijay Lakshmi, because you know there are a lot of chats I am missing out. Anirudh is asking, sir, companies publish quarter results. Some are mentioned audited and some are unaudited. Yes, exactly. That's our point. So if that is audited, means audit is performed. If that is unaudited, means review has been performed. Okay, then I think Vibhor is asking about analytical procedures. See, analytical procedures are all about various procedures which are not in the nature of testing of detail. For example, variance analysis, something that we just discussed. Similarly, there are a lot of other analytical procedures that you are going to discuss in your subsequent sessions in more detail. Okay. Then Kishore is asking, sir, is it compulsory for the listed companies to get this review every quarter? Yes. Okay, Vibhor, I'm hoping you're clear on this. I think Lakshita, I answered your query. Vijay Lakshmi, can you please repeat your query quickly? Om is asking, sir, why we can't obtain absolute assurance under audit? I think everyone knows this because 100% checking is not possible. Huh? Okay, and each and everything cannot be tested. Neeraj is asking, sir, can a company publish unaudited financial statements? See, unaudited financial statements, if you are talking about annual purpose, then no. Then financial statements have to be audited, of course. Sorry, I think Vijay Lakshmi, I'm not able to look at your query. Okay, so Vijay Lakshmi is asking, testing of detail is must. It satisfy all three. So her point is that, sir, if you are saying testing of detail, so it means that all the three procedures that we discussed, in those three procedures, the first procedure has to be the testing of detail. And only when this testing of detail is performed, audit is considered to be done. The answer is yes. Okay, so if I have understood your query correctly. Raju is asking, sir, in quarterly review, can the auditor has no right to check the details A? See, of course, auditor has the right to check procedures of type A. We are not saying that right is not there, but again, the right is being used in a limited manner. Why? Because the scope is limited. Because the report he's going to provide, he'll write that I have done a review, I have not audited. He'll write that I am giving limited assurance. So that's why he'll not get into so much checking. Okay, because the time is limited. So that's the whole purpose of getting into review as compared to audit. Yeah. All right. So I think Kishore, I've answered your question. Anirudh is asking, sir, audit contains all three or only testing of details? All three. All three. Great. So I think Vijay Lakshmi has got the answer. Very good. Amit seems to be okay with this. All right, quickly. So let me just come back to that discussion. Okay, so let's back to the presentation. So now we were discussing about assurance engagements. Remember? Yeah, we were discussing about assurance engagements. So now in relation to assurance engagements, we have discussed two types. We have discussed two types. Yeah. Which types are those? Audit and review. And I'm hoping everyone is clear on this. I'm hoping everyone is clear on this. Yeah. Okay, great. So now there is another type of assurance engagement, which is about prospective financial information, or which is around operation of controls. See, if you look at audit, if you look at review, both of them, they involve procedures around the financial statements, or you can say the information which is historical. So what do you mean by this? The information which is available in terms of actual numbers. Yeah. So that is what you look at as far as audit is concerned or review is concerned. Means the procedures which you will perform on the historical financial information. What do you mean by historical financial information? So let's suppose if we are in 23-24. So the financial statements for 23-24, that will have 2 years. Which years will those be? 23-24 and comparative year, which will be 22-23. So this is what you call as historical financial information. This is what you call as historical financial information. Audit and review, they will always be performed in relation to historical financial information. Okay, but at times management may provide you future information. So what do you mean by future information? Maybe the management has prepared their profitability for next 5 years. So how will the management prepare that? Management, let's suppose, has prepared the P&L for next 5 years. Why? Maybe they need it somewhere. They need it somewhere. Okay. For example, a company is getting listed. Company will need future information, future data, projections. That is what you call as projections. In such a case, if some procedures are required to be performed to check that projection, to check that prospective financial information, then what will you call that engagement as? That engagement will also be called as assurance engagement. That will also be an assurance engagement. Why? Because there again, there will be a company and the party to check that information. There again, there will be some basis of preparation of that information. There again, once the checking is completed, the party which has been appointed to check will provide a report. But in this case, in this third category, this checking doesn't involve checking of historical information. This checking involves checking of prospective information. You can say projections or future data, or maybe something which is non-financial in nature. Say, for example, if it is all about regarding operations of controls. Let's suppose a firm has been appointed to check the projections for next 5 years. Then will you call this as audit or a review? Tell me. Can you call that as audit or review in such a case? Quickly. The answer is no. Nitish is saying no. Anirudh is saying no. Lalita is saying no. Then in such a case, will that still be called as an assurance engagement? Yes or no? Will that still be called as an assurance engagement? Quickly. Yes, Dilip is saying yes. That will be called as assurance engagement. But what type of assurance engagement will that be? Third type. So we have got 3 types of assurance engagements. One, which is audit. Second, which is review. And third, which involves procedures. Which involves procedures on information which is other than historical. Which involves procedures on information which is other than historical financial information. Everyone clear on this? Clear on these 3 things? Any questions? So I can see Sania has one question. Sania is asking, sir, can both reasonable and limited assurance be given at the same time? No. That is not possible. Why? Because if, let's suppose, you have performed audit, then you will give reasonable assurance. But if you have performed review, you will give limited assurance. Why will you do both? Because if, let's suppose, you have done audit, so review is automatically covered. But if you have done only review, then audit is not done. Understood? Clear on this? Clear? Yeah, Sane, clear on this? All right, so let me just look at some more quiz. All right, so Muskan is asking, sir, can you please explain this third type again? Sure. So let's look at this third type again. See, if you look at this first type, audit, if you look at this second type, review, in these 2 types, which information is required to be checked? Let me just go to that working file. Let's suppose there is a company. Okay, let's suppose there is a company. This company has prepared the financial statements. Okay, so this involves a balance sheet. There's a P&L. All of these things are there. Okay, now in this case, if you look at the P&L, so the information is available for 2 years, 23-24 and 22-23. Now this information is actual information. What do you mean by actual? Means it is based on historical data. Financial statements that you prepare, what is the basis that you follow for that? Historical information? Yes or no? Historical information? Yeah. So that's why whenever historical financial information is involved, only 2 types of procedures are possible. What are those? Either audit or review. Yeah, but let's suppose this company has provided another set of information. Say this company has prepared its profitability statement. Profitability statement for next 5 years, means for 25-26, 26-27. Okay, for next 5 years. Now, Will you call this profitability statement as historical financial information? Over to you. Will you call this as historical financial information? Tell me. Answer is no. So that's why in this case, for audit of this profitability statement, or you can say for checking of this profitability statement, the procedures that you'll apply. Yeah. So that project, can that project be called as audit? Answer is no. Can that be called as review? Answer is no. So that is called as other type of assurance engagement. That is called as other type of assurance engagement. Now clear on this? Clear? Everyone now clear on this? Yeah. So Vibhor is asking, sir, it means third category involves future financial information. Let me just say it involves information which is other than historical financial information. Satish is saying, sir, what do you mean by historical financial information? See, the financial statements that you prepare, that is based on actual numbers of the company, means which has already taken place. What numbers do you report? Which have the transactions which have already been executed, the events which have already taken place. So do you record future events in the financial statements? Do you record future information in the financial statements? Satish, tell me, do you record future information in the financial statements? No. So what do you record? Something which has already happened. So that is what you call as historical financial information. Clear? Clear on this? Yeah. Nitish is asking, sir, थर्ड वाले के ऑडिट के लिए और रिव्यू की तरह कोई वर्ड यूज नहीं किया गया है? No. So there's no wording which has been used. You call it as examination of prospective information, examination of forecast. So these are the terms that you use. Okay, audit review. So one word is not there to answer your question. I think that is what you just wanted to understand. No? Okay. All right. So now coming back to your queries, Rachna is asking, sir, historical means present. Historical means the basis which you follow for preparation of financial statements. Yeah. All right. So Anish is saying, sir, you mean projection of future events is third point other than audit and review? Yes, that's correct. Anirudh is saying examination of costing data, that will be third type. Yes, of course. But that costing data should be for future. That should not be the historical financial information. Okay. Vanita is saying, sir, reason for projection. I think you need to elaborate this, please. Huh? So let me just come back to your questions because we can just wind up our discussion for today. Now I'll be discussing your questions and queries only. Yeah. Yes. So I understand Sai has a query. Yes, Sai, please go ahead with your query. All right. So I think Sai is not. Yes. Okay. Yes, Sai, please go ahead.
Sir, in these three cases, will be the audit chartered accountant or a qualified auditor is the only one who will be engaged to perform the activity?
Yes, that's correct.
Let me explain a scenario, sir. If an engineer was engaged to estimate the expected useful life of an machinery, then what would be this be treated?
See,
you will be giving assurance.
No, that is not an assurance. See, that is an advisory service. See, there's a difference between assurance and advisory. When it comes to assurance, what did we say? That a checking is involved. Okay, somebody is required to check something. If you are appointing an engineer who is going to prepare that, create that, then this is not checking. Let me just give this example of financial statements. If let's suppose you are appointed to prepare the financial statements, so will you call that as checking? Tell me. Will you call that as checking? No. So that will not become assurance. That will become advisory. Or you can say that will be the management role. That is other than audit. Clear?
Thank you.
Okay, so I understand Arif has a query. Yes, Arif, please go ahead. Yes, Arif. All right, so Vijay Lakshmi has a query. Yes, Vijay Lakshmi, please go ahead with your query.
Sir, third type of assurance engagement is called other or
सर रिव्यू को समझा देते सर फिर से एक बार और समझना था मुझे.
Review, sure. See, when it comes to review, in case of a review, you perform only two types of procedures. One, you will do management inquiries only. Okay, so you'll go ask the questions. You'll prepare a checklist. There are a lot of questions you'll ask, but that will be all discussions based, all verbal discussions. No checking is involved. Okay, so that is one. Other than that, you will perform analytical procedures. Analytical means you will do variance analysis, you will do comparison of the data, or you will do ratio analysis, you will check as to why profits have increased, why profits have gone down, why turnover has increased. So whole lot of procedures that you will do in case of a review will be limited to only the management inquiries and the analytical procedures. There will not be any testing of detail. You will not get into checking of supporting documents, or you can say checking of details, checking of calculations. Okay, that category of procedures is not included in case of a review. So that's why a review is a limited in scope. Understood?
Sir, the other type of assurance engagement is called as a name only in other type or any other short-term words, sir, in exam papers.
No. So there is no short term, or there is no a single worded name. Okay, so in the exam you will be specified that, let's suppose it's an examination of forecasts, it's an examination of prospective financial information, it's an examination of, say, internal controls. So you'll get to know that because it doesn't involve historical financial information, so that's why it is other type of assurance engagement. And anyways, about this other type of assurance engagement, we'll get into some more details. Okay, so in the next session, we'll continue our discussion on this. We are not yet done. Okay.
Sir, other type of engagement is done by whom, sir?
That is again done by the chartered accountant in most of the cases, because see, the moment this data is involved. Okay, when I say data, means financial data is involved, which is all about the numbers. Then you'll get to see chartered accountant getting involved. But let's suppose if it's all about checking of the internal controls. Okay, so therein you can just say that, of course, it can be other than chartered accountant also. Something which you find in case of an internal internal auditor also. But over here, this assurance engagement we are discussing in the context of chartered accountant. So that's why all of these things will be performed by a chartered accountant only.
Thank you, sir. Okay.
Sure. So I understand Moni has a query. Yes, Moni.
So you are saying the prospective financial information is prepared for future, and the historical financial information is which is already taken place. Is that both are related?
So no, of course, these are not related. Let me just give you an example for this once again. You prepare the financial statements. Do you understand financial statements? Balance sheet, you know?
Yes, yes.
Okay. So now, can you prepare the balance sheet for 25-26? If let's suppose you are asked, can you prepare the balance sheet for financial year 25-26?
If it is assumed, I can.
No. So without assumptions.
No, it is not
Because
possible.
financial statements, you cannot assume. Do the accounting standards permit you to make the assumptions and prepare the financial statements?
No.
Okay, so that's why the financial statements which you prepare is based on what? Historical financial information.
Okay.
If you are making an assumption for 25-26 and you are preparing the balance sheet, you are preparing the statement of P&L, what do you call it as? That will not be called as historical financial information. That will be called as projection or
Okay.
forecast. Understood? This is the difference.
Okay.
Yeah.
So then the historical information, is about the current year data or previous year data?
That is about the period which has already gone by, or you
Gone
can
by.
say in respect of which the transactions have occurred. Okay, something which has become history in an in layman term, you can say.
Okay, thank you, sir.
Okay, sure. So I think these are getting repeated. They are asking me about this presentation. Yes, of course, this presentation will be available. Huh? So this will be uploaded and you will get this. I understand
But does
Hardik and
auditing
Vinuta
take
have a
place
query.
annually or monthly, or
Sorry, can you please repeat?
sir, I'm asking that auditing is done at annually or monthly basis?
See, audit, if you look at this, is generally performed on an annual basis. And as far as this statutory requirement is concerned, this requires audit to be performed on an annual basis. But for special purposes, maybe if there is any need, if there is any requirement, then the management can always engage maybe for 6 months, maybe for 9 months. Okay, so that is also possible. Then I think Goda has a query. Goda is saying, sir, will prepare the provisions. These are future information, right? No. Provisions that you are preparing is in respect of the past period, which is all about historical financial information. Okay. Amit is asking, sir, what is the basic reason for prospective analysis other than institutional research purposes? I couldn't understand this institutional research purposes. There could be a lot of reasons as to why you prepare the projection. For example, if a company is going in for listing, okay, so they'll need the projections. If the company wants to get into valuation, so they'll need the projections. So there could be a lot of reasons why they will need the future information. Okay. All right. So
Sir,
then
can
I
you
think
please
Hardik has a
explain
question.
some of the
Yes.
cases
Sorry.
when auditing takes place other than annually? Some of the cases.
Yes, of course. I told you that audit is not necessary that it will always be performed on an annual basis. See, for a company, an audit is always required to be performed on an annual basis. But if, let's suppose, the management requires that for 9 months, I want my financial statements to be audited. Now, what could be the reason for that? Maybe the company is planning to get listed. Okay, let's suppose a company is planning to get listed. And for the purposes of listing, company needs this data of 9 months as audited. So what will they do? They will get their 9 months audited. So therein audit may come in. Or let's suppose there's an investor. Say there is a subsidiary in India. Investor company is in US. Now the investor wants that the period from January to December is required to be audited. Okay. But in India, which financial year do you use? April to March. So what will happen? This 9 months again will be audited. Okay. So similarly, there could be various purposes. Clear? Isha, clear on this?
Yes, sir.
Okay, great. So I understand Hardik and Vinita have a query. Yes.
Yes, sir.
Good
Yes,
evening,
Vinita.
sir.
Good evening. I think one by one. Hardik, you can go ahead.
Company audit is 9 months or 12 months. I mean, 1
Company
year.
audit is 12 months always. See, the mandate, the statutory audit is 12 months, means the financial year. By
Sir,
12 months, we
audit
mean to say the financial year. Sorry?
audit is review was a difference. Which one is more?
No, so it's audit. For a company, annually, financial statements are required to be audited. So for which period do you prepare the financial statements? Tell me.
So April to March.
April to March, which is a financial year, right?
Yeah,
So that's why
yeah.
every year, for every set of financial statements, there will be an audit.
Yes, sir.
Clear?
Nice. So audit is more than turnover 1 crore. So one.
No, for a company, there is no such criteria of turnover, etc.
So
For
no
a
criteria,
company,
sir.
irrespective of, so every company has to get this audited done.
Yes, sir.
So let's suppose there is no transaction in the company during the year.
It's
Nothing was
applying
there.
business also, sir.
Sorry?
It's applying business.
I couldn't understand. What did you say?
Sir,
A company.
is auditing necessary for public companies also?
I'm saying company. So when I'm saying company, it would mean any company. Yeah? So
Any
whether it is
company, private
public
and
company, private company, listed company, government company, for each and every company, the moment you say it's a company, its annual audit is mandatory. And what do you mean by annual audit? Audit of financial statements every year. As simple as that. Okay. And this comes from the requirements of Companies Act. So I'm sure in case of your corporate law, etc., you'll get to know about this.
Okay.
Yeah.
Okay. Yeah.
Okay.
Okay.
So I think Hardik has a query. Yes, Hardik.
Sir, in the third part of the assurance engagement for other than historical matters, sir, you took an example of plant and machinery. But sir, if we take the plant and machinery for the current year, usually the companies go on revaluation basis. So then, sir, this will come under the historical, or we will other than historical or historical arrangement.
No. So I didn't take any example of plant and machinery. I took the example of projections. Okay.
Yes, sir.
Projections was all about profitability. Say
Yes,
a
sir.
company is preparing its profitability statement, which is nothing but the projections. Huh? So that is the example we discussed. So I'm not sure in what context you are discussing this plant and machinery.
Sir, in revaluation context, if a revaluation is done by the company, then
So
will
if
it
the
take it?
revaluation is done, so revaluation will have a cutoff. Let's suppose there's a company,
Yes,
okay,
sir.
and this has done the revaluation. So let's suppose this company has opted revaluation mode. So do the accounting standards permit that? Answer is yes. So which
Yes,
period
sir.
will that be done? Let's suppose this is done for year ending 31st March 24. So is that the period which is historical, which is all about historical financial information? The answer is yes. So this
Yes.
revaluation is nothing but a part of historical financial information. So we'll not consider
And
that to be something other than historical.
Hello.
okay, sir. Okay, sir. Thank you, sir.
All
Thank you,
right.
sir.
Sure.
Hello.
Yes, I understand. Yes, please go ahead. Huh? I understand some more queries are left. Okay, so Ankit is saying, as you mentioned, lakhs of transactions, any 4 transactions contain 4. If auditor is not able to identify, then what is the importance of auditing? See, that is what we have discussed so far, and that is the limitation of audit. Okay, and you need to understand the limitation because we discussed that each and everything cannot be checked. Okay, but as you'll move further, I think I can appreciate some of your concerns, but as you'll move further in course of your subsequent discussions, when you will get to know about this audit in greater detail, then you will also know that some of these things are generally taken care of through the audit methodology. Okay, so far we've just started off, so that's why I can understand your concerns, but you'll get to know about this in more detail. Okay. Then Goda has a query. Goda is asking, suppose we made provision for claim of any litigation. So this is past event, of course. See, I think you are now just trying to put across a lot of questions, which is all about accounting, which is again good, but you need to understand that the moment you are talking about accounting, so accounting for which period you will do, and all of these things for which period you will do, that will be something which is in relation to the period for which you will prepare the financial statements. So that's all based on historical financial information. That is how you need to understand this. Okay. Lakshita is asking, sir, what are the benefits of examination of? See, there could be a lot of reasons. It's not about benefits. It's all about need of the company. A company may need that. Like I told you, company is going in for IPO, so they will need the projections. Okay. Ankit is asking, sir, inquiry and expansion are the same? No, see, inquiry is all about discussions or asking questions from the management. Inspection is not limited to verbal discussions. Okay, inspection is a step beyond that, wherein you are going checking something, you're looking at documents. Okay, so huge difference between these two. Yeah, Goda seems to be clear on this. So I think if you are clear, if you are done, then we can just wind up our discussion for today. And please remember, we are not yet done with this chapter, not yet done with this topic. We are going to continue. And once again, my request to everyone is that please make sure that you revise both these set of sessions. So all of these things are picked up from the study material. So you have got notes in the form of this presentation you are going to get, and otherwise also you'll be preparing this. So just please make sure that you revise before we meet next. All right. So we can just conclude this discussion now. Thanks so much for your time, and once again for your wonderful participation. Thanks so much. Yes.